Hi everyone and welcome to today's morning report on Friday 16th of December with me, Rich, Power Market Analyst at Handset Markets. European markets fairly flat today. The markets have been taken on obviously a new leg of dollar strength in the wake of this FOMC decision. I've just been away for a few days in China, so I'm sort of catching up a little bit with events, and so I need to sort of talk about a little bit about the fact that these treasury yields have strongly moved higher again on the back of that FOMC decision. The Fed's now moving towards 3 rate hikes in 2017, up from previously expected 2. So markets are now pricing that in. You've got 2-year yields strongly higher, also 10-year yields, and the dollar has reacted accordingly, pushing strongly higher. So markets are just slightly consolidating today. Nothing too significant in terms of a corrective move. The yields on the 2s and the 10s are still, or just generally the US yield curve is basically the thing to follow in terms of dollar trading. The sort of steeper the yield curve gets, the dollar will be strengthening. So the yield curve is, 10 years and 2s and 10s are slightly lower today, so the dollar is slightly lower. So that's not expected to be a continuation or a move that continues in any way at all. I think it's just going to be a near-term sort of corrective move, and ultimately I think it will be bought into again. So there's no real suggestion that that's going to happen. The stronger dollar has hit commodities. Sort of the oil price came back lower again, sort of basically stable today, but get rid of that line now, can't I? That doesn't do a great deal. But you're back below that sort of breakout level. It's just consolidating. If the oil price, say for example on the WTI, fell below 49.60, then I think you're looking more corrective. But for now, it's just a little bit of a corrective move that ultimately should probably, again, provide a little bit of buying opportunity, really. But markets are fairly stable today. Nothing too significant in terms of equity market moves, and I think the dollar is just mildly lower, but it's not really going to be pushing too much in terms of a correction, I think, until it gets, before it gets bought into, because I think it's got further move to run. We've seen euro dollar falling to a new multi-year low, dating back to I think 2003. So ultimately, I think these markets are breaking key levels. Dollar yen again burst higher. 1,700 ticks on dollar yen since Trump's victory. It's an incredible move. But I'll talk about all those in a bit. But my sort of economic data points to look out for today is, first of all, let me just show you the list. Not a huge amount today. Bit of a Eurozone inflation. And a bit of US housing this afternoon, building permits and housing starts. So starting off with Eurozone inflation, this is the final data for the month, and it's not expected to change at all. From 0.6% last month was the flash reading, so 0.6% headline is expected to maintain there. So that would be an improvement slightly on the October level, and also headline staying at 0.8% on the Eurozone inflation there. Building permits and housing starts 123 million. 124 million on building permits, so basically where we were last month. 123 million is slightly lower, but look how strong it was in terms of housing starts, but still pretty positive in terms of the housing data there. So a little bit of data, but nothing really to get you too worked up. My chart today is the Kiwi dollar. Now we have seen obviously the US dollar strengthening in the last sort of few weeks really, but not really impacted yet. But last couple of days of dollar strength has really dragged back the Kiwi dollar. And look at this 69.50 level is a massive support, and that would be a massive head and shoulders top pattern. That'd be a 6-month top pattern that would be a significant downside break if it were to be seen. So you sort of measure 74.80 down from 69.50. It's like 500 odd pips of corrective move possibly still to be seen if this one really does break down 69.50. So that would be a really key breakdown. We're already we've broken below the uptrend channel and found resistance around about the old support of the uptrend channel, so that's not great, and breaking down below 69.50 would be a really significant downside move. So you're looking out for that to be seen. I think you're seeing on the Hourly chart, you've got lower highs, lower lows. Sorry, just on the daily chart indicators, again, you're sort of looking corrective. The MACD lines have turned negative again, below neutral. Stochastics falling, RSI falling. Similar sort of outlook on the hourly chart, really. Little rallies are a chance to sell, I think. You've got the initial sort of breakdown level. 70.40 is the basis of resistance now. That sort of came in yesterday. 70.55 I think was yesterday's sort of rebound high, or the overnight rebound high I should say. So around about that sort of 70.40 level is starts to come in overhead supply again today. That's pretty much the level of resistance that we've seen sort of forming through this European session, 70.40. So little rallies are a chance to sell, and I think it's going to continue to put pressure on yesterday's low, 70.06, but ultimately 69.50 is that big key level, and if that breaks then it opens up, really does open up the downside. So I wish you good luck in your trading today, and I will speak to you later. Thank you.